United States rare coins is one investing market where insider trading is not only perfectly legal, but necessary. In this first discussion of insider trading in rare coins, you will meet Silvano DiGenova. Mr. DiGenova has been a nationally recognized expert and inside trader in rare coins since the early 1980s. He made his first million in coins before his 20th birthday and has personally earned more than $25 million trading in rare coins over the past 20 years. Over his career, he has personally traded nearly $1 billion worth of rare U.S. coins. He was recognized by Fortune magazine as one of their people to watch when only 24 years old. He has been quoted in the Wall Street Journal, by dozens of major newspapers, and has been profiled on the Paul Harvey radio show. Mr. DiGenova is a member of every major numismatic organization. He was one of the founders of the Professional Coin Grading Service and was the primary author of the standards by which PCGS certified coins are graded. He also helped design the grading standards for Numismatic Guarantee Corporation, thereby assuring a competitive marketplace for graded coins. In this first of a series of insider trading in rare coins, Mr. DiGenova discusses rarity and value investing.
The difference between the real coin market and what collectors and dealers think it is. Many people, particularly people outside the coin business, think of the coin market as a fairly precise buy-sell market, not too far removed from, say, the NASDAQ stock market, where items have a bid and an ask, and so on. People believe that it's a fairly orderly and liquid marketplace. And in some cases, there is a large degree of liquidity, and there is some degree of orderliness to the market. However, the coin market, in reality, is very fragmented and is subject to a lot of different issues. It's subject to market manipulation. It's subject to fads that can greatly inflate prices. It's subject to liquidity crunches that can hurt the marketplace. Because the coin market has a very, very limited supply, it takes very little to cause tremendous price increases in areas of the market. A good example would be if you have a coin, let's say a fairly common coin, that there's maybe 10,000 of. Well, if you've got 20,000 buyers, the price of that coin is going to double or triple or more. And this is a fairly common occurrence, especially these days with internet and television touting coins in a lot of different ways. Virtually all of the major television marketers, QVC, Home Shopping Network, Shop at Home, are selling coins in large quantities. This can cause artificial spikes in the marketplace. Not to mention that some of the other large broad-based coin retailers can easily cause a spike in the market by needing a certain type of coin. It's these type of pitfalls that most collectors don't understand. Another key aspect of the coin market that most people don't understand is they feel that now that we have certified grading, that the grading problem has been solved. This is an inaccurate assumption that most of the people at the top of the market realize. Unfortunately, grading is subjective. It's always been subjective, and it cannot be 100% consistent. Routinely, some of the top buyers out there can scour a bourse floor or a collection and find a coin that may be graded a certain grade and determine, hey, this coin appears undergraded. Break it out of the encapsulation, resubmit it to the grading service, yield a higher grade, and therefore net a substantial profit. Although this is not the rule of thumb, a long-term investor doesn't want to have a coin purchased that is one of these coins that is at the maximum grade level. You'd rather have a coin that is as conservatively graded as possible so that somewhere in the future you might benefit from this increase in grade, as opposed to have an expert look at it or a skilled collector look at it and say, God, this coin is really very poor for the grade. Again, this is an issue that most in the coin market don't know thoroughly. And then there's myriads of other factors. I mean, for example, let's pick copper coins, for example. Huge premiums are paid on copper coins that are designated red, meaning they have their full mint luster. Well, unfortunately, with a copper coin, this could change over time. If you have a large cent, for example, in Mint State 65 red, it's a $2,000 coin. But a Mint State 65 red and brown is less than a $1,000 coin. If the coin changes over time through oxidation, this could greatly affect the value of your item. That's, again, a rare situation, but one that could occur that people need to be made aware of. Really, our concept is much like a mutual fund or a fund of any kind, where you buy things that are undervalued. If and when they appreciate, you sell those off and look for other things that are undervalued. Even if the market had a continuous upswing, within the marketplace, you're going to have issues that go way up in value and other issues that go down in value. And you're going to have situations where items can be bought for less than market due to unforeseen circumstances, and some items that are going to be priced at over market due to individual collectors maybe battling it out. At every single auction and every single bourse floor, basically you have an open forum to find bargains and to have material change hands at way over market. Only someone that is really knowledgeable can pick and choose and find the right items at the right value. And then on top of that, it also enters the issue of grading. Again, you want to buy items that are high quality for the grade. Thirdly, you want to buy items that haven't been recently promoted. So you need a portfolio manager, you need an expert trader who can assemble a group of items that make sense in the current market environment, as opposed to just buying something that you just enjoy. Now, there's a lot of long-term strategies where you can enjoy and create a collection and put something together of value up and above the sum of the pieces. All this still fits into our forum, and collecting long-term has certainly been one of the more profitable arenas if you know what you're doing. First of all, you want to pick an area of the marketplace that is undervalued to start with, as opposed to picking an area that is way overvalued. A perfect example would be of an area that's overvalued today are Lincoln pennies in Mint State gem red condition. I call these baby boomer coins because every wealthy baby boomer we know has been buying these things up. The market on many items have gone up 5 to 10-fold in just the last 3 or 4 years. This is not something that could be sustained for much longer. An example of items that are still currently undervalued would be possibly a set of Liberty nickels in Mint State, or a set of 3-cent nickels in Mint State, or possibly a set of trade dollars in Mint State. These are items that are actually nowhere near their all-time highs and that are much rarer overall and really do have a substantial intrinsic demand. It's just that no one has done any promotion like the Lincoln pennies. The main reason trade dollars haven't been promoted is because they're scarce. You know, most of the promoters are larger firms looking to do the path of least resistance. So promote something they can get their hands on in quantity. Again, with the Lincoln pennies, it's more been the fact that these individuals were familiar with these coins. But they've driven up values to unrealistic proportions. You know, a coin that is not that rare, like a 1909 SVDB, selling for $4,000 for a Mint State 65 red, when you can buy a coin that's infinitely rarer, say in a trade dollar or a shield nickel, for a lot less money. Understanding rarity is one of the key issues in the marketplace. Very few people really understand what's rare and what's not. And that's one of the key factors in the demand side, as well as the obvious supply side. The rarer something is, the less it's in supply. Many things are portrayed, as rare, which are not. And the population reports of the grading services can sometimes tell you what's rare and what's not, but not entirely. Because there are many, many series out there where only a small percentage of the known marketplace of the existing items are certified. Silver dollars is a very clear-cut example. Common date silver dollars, I still feel that 80% of the known coins are not certified. So the common coins are far more common than, any of the population reports would ever justify. Now, fortunately for issues like silver dollars and also St. Gaudens, the demand is very high because of the intrinsic beauty and the ability to collect a wide range of dates and other factors, and many promotions over the years. So that sort of helps mitigate things to some degree, but long term, it doesn't. But what that helps you is when you have a series that's very popular, find the coins within the series that are rare and buy those. Or buy the ones that are fairly scarce but only sell for a small percentage over the common dates. And there's many items like that out there, for a value investor to get involved in. But most dealers are just going to take the path of least resistance and sell the most common dates because they're the most available out there, and they can charge the cheapest price. And having a staff like we have that, have been trading in these things for anywhere from 20 to 40 years per person, and who've transacted anywhere from 50 to $500 million in transactions, we intimately know which coins are rare, which coins are out there, which coins are uncertified, and where, a lot of these coins are placed. I think you could complete a couple of really nice collections for $100,000. You could complete a Liberty nickel set, you could complete a 3-set nickel set, and you could probably complete a Shield nickel set. 3 sets that are highly collectible in that price range. You could probably complete 2 of the 3 sets for that same $100,000 range. And there's a lot of other interesting things that could be done with the money. For $100,000, you could put together a date set of Morgan dollars, one of each year that they were made, in mint state 65 condition for $100,000. You could buy a fantastic rarity. You could buy a museum quality proof set of gold coins, something where less than 20 exist in the world for $100,000. Again, besides being able to put together several collections, another possibility is that you can acquire one museum quality coin. For example, you could purchase an 1875 $3 gold piece, a coin that has an original mintage of only 20. Only 20 were ever struck by the U.S. government. This is a coin that was the first coin ever to break the $100,000 barrier, and it was done in the early 70s. Today, due to unusual circumstances in the market, you might be able to acquire one of those as low as $85,000. That presents a tremendous value relative to a 1919 penny for $100,000. Another example, recently an 1872 1-cent coin in mint state 66 sold for upwards of $80,000 to $90,000. Now, although an 1872 penny is far scarcer than a 1919 penny, this is still a coin where the mintage is in the millions. More than 500 specimens have been graded in mint condition. Just to cite a comparison, at the same time that penny sold for $80,000, $90,000, you could have acquired an 1872 $5 gold piece and an 1872 $10 gold piece, both amongst the finest known, for about the same price. Now let's look at a comparison here. The 1872 $5 gold piece has a total original mintage of only 1,690 coins, and the 10 only 1,650 coins. Of these, most were destroyed, melted, or worn. In fact, less than only 7 mint state examples of an 1872 5 have been graded by the combination of both grading services, and less than 5 mint state 1872 10s have been graded. So let's compare. The pair of those coins combined, you have 12 coins graded. Let's compare here. For the 1872 5 and 10, you have 12 mint state examples in all grades graded. The 1872 penny, you have 543 coins. In each case, you can buy the finest known specimen. Now, on the 1872 penny, one grade point difference would have lowered the value by 70 or 80%. Now, do you want to rely on a third party to make that decision for you? Or you can buy two coins that are overall infinitely rarer for probably less money or about the same amount of money. These are the type of distinctions and pitfalls that someone really that wants to invest for value can do. I mean, this is the classic Warren Buffett strategy where, while people are putting their money in the internet balloon stocks, Warren Buffett is accumulating, solid value companies. And some of these issues like a 1919 penny and Mint State 69 are very similar to, a CMGI stock at $300 a share that now trades for 50 cents. And although the 1919 penny may not drop from 100,000, from probably a similar ratio of depreciation could occur, and certainly it's very vulnerable to lose 90% of its value. I'll cite another example. In the mid-'80s, actually in the late '80s, I had the good fortune to purchase an 1880 silver dollar in Mint State 64 that was a really choice example. I examined the coin and determined in my mind that the coin should have been Mint State 65. Well, as it turns out, at that point in time, PCGS had not graded a single 1880 silver dollar in Mint State 65. I purchased this coin for $3,000, broke it out of the holder. After several resubmissions, it was finally deemed a Mint State 65. I sold the coin immediately for $50,000. That coin traded hands several times, and within a year was valued at over $100,000. In my opinion, this was an absurd scenario. Within 3 or 4 years, the coin started depreciating greatly as more and more 1880 dollars were graded. Today, more than 30 1880 dollars have been graded 65 grade, and the coin is valued at less than $10,000, a depreciation of over 90% over the last 10 years. This is a clear-cut example of knowing which coins exist out there and steering the clients away from this type of purchase. We wholesaled this coin out, and immediately, dealers fought over this coin because it was the only one. Dealers that were not knowledgeable on the subject. In my particular case, I had owned an original bag of 80 silver dollars. I know how many are out there, and that it was an anomaly that none had been graded at that point in time. I think at $10,000, it's subjective whether the coin may still be overvalued in today's marketplace. Regarding the long-term investment viability of the coin market, many studies have been done. In a study that we did where we used the 12-piece gold typeset, which is really a long-term standard in the coin market, against the Dow Industrial Average, we found that since 1970, the coin market has outperformed the Dow by more than 3 to 1. And in regard to the S&P 500, has outperformed the S&P 500 by nearly 3 to 1. However, this is based on a fixed portfolio in the coin market, which is not even a, quote, investment standard portfolio. It's more of just the way coins are collected. They're one of every one of the major gold coins. In reality, there's at least 2 coins in that portfolio that I don't think are investment quality at all. In the situation with the Dow and the S&P, since that time period, many of the components have been replaced. For example, John Manville was a Dow stock in 1970. However, it was replaced because the company went bankrupt. If we had a true graph where when a company went bankrupt, the value went down to zero as opposed to being replaced with something that was an appreciating asset, the Dow would have performed a lot worse. The compounded return on the U.S. gold typeset is somewhere in the area of 15-16%, and the compounded return on the S&P 500 is somewhere in the area of 13%. In baskets that, for example, Collectors Universe did a study, some of the top performers, for example, silver dollars, $1,000 purchased in rare silver dollars in 1970 would be $131,000 today. That's a substantial return. Selective areas of the coin market have done, a lot better even than these general statistics that we're using. I don't know that those are in the index. They have been promoted from time to time. The $20 St. Gaudens is in the index, and obviously that's a coin that's been promoted back and forth and up and down. If you remove coins that are subject to fads and, stick to just the true rarities, you can make a very strong case for a long-term portfolio that is a true market outperformer. One of the key issues in value investing is the market cycles. And every market, whether it be stocks, coins, art, are subject to cycles. Collectors Universe did a very nice study on market cycles where they analyzed up cycles and down cycles. And I'm going to outline the history since 1970. From 1970 to 1974, we had a bull market. In this time period, coins appreciated 348%. 74 to 75 was a bear market. In that time period, coins adjusted downwards only 23%. 1975 through 1980 started one of the largest bull markets. In that time period, coins went up 1,195%. Starting in April of 1980 through June of 82, one of the worst recessions we've ever had, coin prices went down only 47%. From 82 to 89, the next bull market, coins went up 665%. Setting in mid to late 89 through 94, another one of the worst recessions this country has ever had, prices depreciated about 74%. From 96 to date, so far, prices have been up more than 20%. Gives you an indication that if someone actually followed the cycles and made recommendations to buy at low points in the marketplace and sell, and not necessarily even catch the top, but anywhere near the top or even on the way down after the top, tremendous opportunities for profit exist. And long term, overall, each top has beat the last top, and each bottom has been a higher bottom going forward. If you invested in the Dow in 1965, year-end closed at 969.26. In today's marketplace, it is definitely possible to use the basic rules of value investing and even technical, graphical, statistical analysis to the coin market. However, there's a lot of idiosyncrasies that you need to be aware of in the coin market. Unlike P&Ls, price-to-earnings ratios and price-to-debt ratios, what you need to know is supply versus population ratios, probabilities of grades changing or gradeflation, so to speak, overall supply, overall demand. A lot of similarities, but as in the stock market, however, the issues are different, and only people that are well versed in the coin market can take these types of pieces of information and create this type of analysis. I have the advantage of having both backgrounds, having attended the Wharton School of Business and in finance. I understand the concept, and having battled the coin market for 25 years, I understand the concepts that are important in coins. Number one, value depending on populations. Population reports are a statistical compilation of how many coins have been graded. And this is a very, very valuable tool if you understand the tool. You cannot blindly use a population report. For example, if someone is selling you a coin stating, hey, this has a population of 1 or 2, and trying to achieve an enormous premium for this reason, this is inaccurate. What needs to be looked at is what is the total population of this item in the grade below it, possibly 2 grades below it. And then what does 20 years experience tell you of the population that is not certified, items that have not reached the grading service? Certainly if we're talking about an item, let's say like an 1875 $3 gold piece, and they cite that there's a population of 2 in proof 65, the likelihood of many more popping up is very small, since only 20 of them were made, and probably only less than 10 exist in all grades. However, if someone is telling you about a silver dollar, like an 1880s in Mint State 69 grade, and trying to pitch a price of 30 or 40,000 on such a coin, which I've seen them trade, while 1 grade below the coin is worth only 2,000, and hundreds exist, and probably thousands still exist that aren't graded. So a blind allegiance to the population report is not valuable. However, relative populations are very important, and an example here being, if you have a coin that has a population of, say, 200 in one grade and 50 in the next grade, and that coin is selling for the same price as something that has a population of, say, 5,000 and 2,000 better, then it's reasonable to say that the first item is much more undervalued in today's marketplace. That is the issue of populations, and more will come in the future. The next issue is value based on grade. Not all coins graded the same grade are the same. If you have a coin graded Mint State 65, let's just say for the sake of argument, and it is a very high-end coin where it may become a 66, it's worth paying a substantial premium for that coin because it may still be much, much cheaper than a Mint State 66. On the same token, if you're buying a Mint State 66 that's really overgraded, even if you're buying it at under the published market price, you may still be overpaying. Now, this differential of within a grade, it's difficult enough to determine one grade from another. Less than 10 individuals in the country can very fluently do such a process. We certainly feel we're at the pinnacle of this group. A novice or even an expert collector is going to have extreme difficulty in making this decision. Greg Bingham, ex-lineman for the Buffalo Bills, who was a major collector. In fact, his collection was known as the NFL Silver Dollar Set, and PCGS designated it as NFL. Now, here's an individual who's very, very sharp, spent a lot of time on this process, but still, he would consult with the best guys in the business, 2 or 3 dealers, in determining, hey, Sil, is this coin a shot or possibly a 66, or is this coin just an average quality coin? And in his case, he would rather not buy the highest grade coin. He'd rather buy a coin 1 point less if it was truly premium quality. Long term, that's benefited him tremendously. Greg Bingham referred this as his collection as the smart set because many people were out there buying silver dollars, and he would never want the finest one by means of what the PCGS determined to be the finest. He'd rather buy the second finest when the quality was almost as good or as good, but graded lower, and then waited for the rewards. And long term, his set was the smart set, and he was the smart money. Next, knowledge of the marketplace and trends in the marketplace. The coin market is often subject to promotions by different groups. Because of the overall popularity of coins, it's very easy to do a television promotion or a mail order promotion or an internet promotion and generate demand for a relatively common coin. and that coin would appreciate in price very quickly because they need to fill their demand. You don't want to get caught up in these type of promotions, and generally speaking, they can make a very good argument why you should buy a certain coin. Well, it's the first year of issue, and this year they did not put the motto, "In God We Trust," on the coin. And a lot of wonderful, flowerous reasons. However, fundamentally, these are the absolute worst coins to buy at those points in time. And these are the things that most people will come across because lots of marketing dollars have been spent there. Generally, these type of items are inflated by as much as 100% to, fill the supply, and they're more sold closer to novelties than true long-term investment vehicles. The next area along the same lines, not as egregious a problem, but could still affect the long-term profitability, are fads. Some coins get in favor, become hot, and groups of collectors will chase them. The Lincoln Penny set is one of the ones that most comes to mind recently. And there are many scarce issues in Lincoln Pennies, and it's a great collector coin, and the reality is it's certainly an item worth owning. However, when multiple collectors are chasing the same thing, prices rise very quickly. And we don't recommend buying into a marketplace where there's been a huge appreciation in the last 5 years. You don't want to buy at market peaks on a certain item when you have the opportunity to buy things at market lows. In regard to the example used, like the 1919 penny in Mint State 69, or the 1880 dollar in Mint State 65, also at over $100,000, these were time bombs waiting to explode. The 80 dollar bomb exploded, and someone lost 90% of his money. The 1919 penny has yet to explode, but our feeling is it's inevitable. One of the key issues in the coin market always is rarity. As in the real estate business, they say there's three things that are important: location, location, location. I believe in the coin business, the three most important things are rarity, rarity, and rarity. Although demand certainly could be a key factor as well. And what is something that's truly rare? Well, many marketers out there will try and lead you to believe that they have a coin with a population of 1, 2, 5, 10, it doesn't really matter what the number is, and portray it as being rare. Rare is an absolute number. Just because a coin has a low population in a said grade doesn't mean it's rare. A coin that's rare is one that intrinsically overall is rare. A coin that has a mintage of 20 is extremely rare. A coin that maybe 100 examples exist in all grades is extremely rare. A coin even that has 1,000 coins in all grades is rare or scarce. However, a 1919 penny in Mint State 69 has a population of 1. However, thousands exist. An 1880s silver dollar in Mint State 69 may have a population of only a few. However, hundreds of thousands of these exist in all grades. This coin is not rare and will never be rare. Demand certainly enters into the equation of rarity, because obviously if you have tremendous more demand than supply, then the coin has relative rarity. However, we like to look at items that are rare by absolute standards. Items that have less than 1,000 coins out there, in a marketplace with 10 million collectors, makes them very rare. One of the things that we look at in determining rarity is not just the population report, not just what is on the marketplace, not just the auction records and how many have sold in the last 50 years, but the combined experience of our staff, of which most individuals have been in the market between 20 and 50 years each, and the countless thousands of coins we've seen, collections that we've seen, items that have never hit the marketplace. Combining all of that, plus speaking to many dealers who have been in the market long before us, some of which have already passed away, friends of ours that have been in the market since the 20s and 30s, and their recollection of what they've seen and what is buried and so on. Take all of this information, and then you know what exists and what doesn't exist, what is rare and what isn't. I remember we sold a proof $20 gold piece to a good client for $40,000 in 1986. Okay? The client was a doctor from Stuart, Florida. Sold him the coin for $40,000 in 1986. In 1989, we offered him $120,000, and he wouldn't sell it. And today it's probably, the coin is still up today. The market came down, then went back up. The market probably bottomed out at like 60,000. Then in 1998, it was probably worth 90,000, which was the last cyclical peak. And right now, we're at probably close to another cyclical bottom moving forward, and the coin's worth maybe 75,000. I think the biggest opportunities are in taking items that are undervalued in today's market, and there's plenty of series that are popular out there. Liberty Nickels, for example, are a very popular series for a multitude of reasons. The Liberty Nickel series historically is very interesting because both the first year of issue and the last coin had major controversial events tied to them. The first year of the nickel was 1883, and nowhere on the nickel did it say cents. So some unscrupulous individuals would gold plate them and pass them off as $5 gold pieces. So before the year was out, the government had to reissue the coin with the cents on it. On the tail end of the series, apparently, without government record, 5 coins were issued in 1913. No one knows why, where they came out of, and this has become one of America's most famous and most valuable coins, the 1913 nickel, which we had the pleasure of selling the most valuable one of these for $1.82 million. But, the main series from 1883 to 1912 is very collectible. It's not an onerous number of coins. They were struck mostly just in the Philadelphia Mint, except for the last year, which they struck also a Denver and San Francisco coin. You can buy a gem specimen for $500 or $600, or you can buy a coin that's near a gem specimen for under $200. And to understand how rare a coin you get for $200 or $500 or $600 rather, I'll cite an example. Okay, the most common date, 1911, MS65 coin, a gem. Only 93 coins graded by PCGS with only 11 better. So you can buy a coin for $600 that there's only 93 of with a handful better. Or let's even say you step down one grade and buy a coin for $150, $200. There's only 300 graded. Now, let's take a comparable coin in, say, a series that overall is overvalued, like the Morgan dollars, okay? For $150, what do you get? For $150 in a Morgan dollar series, you're going to get a coin, and it would cost you more. In fact, it would cost you $200. You'd get a coin with a population of 7,000 with 1,200 graded better. Now, for the same price range as the $600 coin, in a Morgan dollar, you're going to get a coin that has a population of like 1,100 with over 100 graded better. It's a much better value. And the other thing is that completing a Morgan dollar set is a virtually impossible task that is going to involve, even if you're willing to, in high grade, it's virtually an impossible task, and it would take you over $1 million. On the Liberty Nickels set, you can complete the whole set, for, under $50,000. Well, since it's very undervalued, you'd have to have the patience to put it together. It could take a while. It could take 6 months or a year, which would make it an interesting task, a challenging task, and that's to get the best value for your money. If you wanted to just bing bang spend the money on the spot, somebody sharp could go put it together in a few months, okay? And that it probably still would be a good value. 2 or 3 years ago, we were recommending Indian pennies to clients. Now that area is red hot. We're telling our clients get out of them. We were recommending Washington quarters 2 or 3 years ago. That area may not be at a peak yet, but it's getting close. There's areas that are overvalued in today's market. And there's a bunch of coins that I call baby boomer coins, which primarily are the following: Indian pennies, Lincoln pennies, Buffalo nickels, and Mercury dimes. These are all the coins that the baby boomers found in pocket change and collected. Now they're all beating each other on the head to find the finest known and to complete these sets. And they've driven the prices to insane levels. We recently sold a 1955 double die penny for $27,000 in one of our auctions. That's an enormous amount of money for this coin. We sold these coins for $5,000 or $6,000 4 or 5 years ago. 77 penny. We bought one of the finest known examples for $4,000 or $5,000 in the early 80s. In the late 80s. The coin would bring 75 grand today. I mean, coins that have gone up more than tenfold in the last 4 or 5 years, we think are overvalued in today's market. We know what they are. We can tell you what they brought before, what they're going for now. And having a staff like we have that, have been trading in these things for anywhere from 20 to 40 years per person, and who've transacted anywhere from 50 to $500 million in transactions, we intimately know which coins are rare, which coins are out there, which coins are uncertified, and where a lot of these coins are placed. You're going to get all of our knowledge. We routinely tell people not to buy items. Now, I'd like you to tell me when the last time you walked into a BMW dealer or a Mercedes dealer or a Cadillac dealer and said, well, I'm interested in buying this car here, and they said, no, you don't want that car. That car's not a good deal. Well, we do it every single day. In our auctions, we guide people and we try and keep them away from things that are potentially a bad deal long term. And we use all our knowledge and all of our experience to establish that.